Hi students, today we are going to discuss on what is income tax, Income Tax Act 1961. So why every citizen who is again earning to a certain level has to pay income tax? Do you know what is the reason? Income tax is one of the major source of revenue for the government, and actually it occupies a dominant place in the direct tax. The administration and the collection of income tax is vested in the central government. However, the net proceeds of the tax, that is, gross amount of tax collected minus collection charges, are apportioned between the central and state government. The following are excluded from the divisible pool, that is, the corporation tax, the income tax on companies, the proceeds of a tax attributes to union territories, then the tax payable in respect of the union emoluments, that is paid out of the consolidated fund of India. Consolidated fund means the union fund and the state fund. Next one is again surcharge on income tax for the purpose of a union, if any. So in India, tax on income other than agricultural income is levied and collected under the Income Tax Act 1961. The Parliament enacted the Income Tax Act 1961 in exercise of its power conferred under Article 246, read with entry 82 of list 1 of the 7th schedule to Constitution of India. So as a business student, you need not want to learn those things. I mean, like as a schedule, you need not want to learn or a list, whatever it is. You just want to know about why income tax and income tax other than agricultural income is levied under the levied and collected under the Income Tax Act 1961. So by Article 270, taxes on income other than agricultural income shall be levied and collected by the Government of India and distributed between the Union and State as per the recommendation of the Finance Commission. So income tax is one of the major source of a revenue of the government, as I said earlier. See, features of income tax in India. So what are the features? It will be a essay question, might be. So what are the features? The first one is it is levied as per the constitution. So as per the constitution, the citizen has to pay the taxes. So that is again right to equality should be there. Everyone will be equal in front of law, before the law. So that is again what exactly constitution is saying. So as per the income, everyone should be stratified equally. Second one is levied by central government. Definitely income tax is again levied by the central government and distributed to different states, territories, etc. Third one is again it is a direct tax. In the previous video I talk about direct tax and difference between direct tax and indirect tax. Direct tax is again directly levied by the individual, the citizen. Indirect tax is again you should have to give indirectly. That is again like uh, if you buy something, definitely you have to give taxes for that product, which is again the tax incurred by the retailer, by the wholesaler. The wholesaler will buy tax from the retailer, which is incurred by him from the manufacturer. So that is indirect tax. And income tax comes under direct tax. Next one is again annual tax. So it's an annual tax. Every year you can see like March or April, everyone who is again earning will file income tax returns. So it is again annual tax. You need not want to give every month or every week or every day. So fifth one is again tax on person. It's again tax on person only. It's not a tax on corporation or a tax on body incorporated, etc. It's again tax on person. So tax on corporation will be also there, but it will be also considered as, for corporation it will be considered as a separate legal entity. He is also considered as an artificial person, but normally income tax is considered as for an individual or citizen. Sixth one is again tax on income. So as per the income, how much you earn, so you should have to proportionate. You have to give a certain percentage of the income as per the slab, which is again given, instructed by the government of India or the legislature. Next one is again income of previous year is again assessable in assessment year. So there are two types of years we in finance, that is again assessment year and financial year. Financial year is again the running year. Assessment is year is the previous year. You have to levy the taxes for the assessment year. Eighth one is again charged at prescribed rates as per the budget, or as per the law, as per the taxation law of taxation. You should have to remit your tax, or you should have to levy your tax in certain amount as per your income you are earned. Ninth one is again administered by the central government. It is again controlled by central government, and it is applicable throughout India. There was no restriction to or exemption for certain states. No, every I mean, like a taxation, income tax rules is again applied to every states in India. See, see the bifurcation of income taxes. You can see general public below 60 years of age, income tax slab would be up to 2.5 lakhs. There is no tax you should have to levy. From 2.5 to 5 lakhs, it is again 5 percentage. Rupees 5 to 10 lakhs, it is again 20 percentage. Above 10 lakhs, it is 30 percentage. For senior citizen up to rupees 3 lakh, it is nil. That is senior citizen, the age group is again 60 to 80 years of age. So up to 3 lakhs, they need not pay levy tax. From 3 to 5 lakh, 5 percentage. Again same. 5 to 10 lakhs, 20 percentage, same as like a general public. Above 10 lakhs, 30 percentage. So every senior citizen, more than very senior citizen, that is more than 80 years of age, up to 5 lakh, they have a tax exemption. From 5 to 10 lakhs, it's a similar, that is 20 percentage. Above 10 lakhs, 30 percentage. So you can see different slabs of for different individuals. So next, you can see the bifurcation. So taxable income for partnership firm up to 2.5 lakhs, it is again nil, and 2 to 5 lakhs, 5 percentage, same as like individual, and 5 to 10, 20, and above 10, it is 30. See income tax slab for Indian companies, that is again up to 1 crore, 30 percentage is indeed needed. In health and education, it is 4 percentage, and rebate under section 87A, financial year 2019. Above 1 crore but up to 10 crore, that is again 30 percentage, same. And the surcharges 7 percentage. Health and education says 4 percentage. Above 10 crore, it is like a 30 percentage, and surcharge is 12 percentage, and health and education says is 4 percentage. So almost same for uh, every income of a company, that is again above 1 crore to 10 crore, and up to 1 crore it is 30, and above 10 crore it is 30. Next one is again income tax slab for Hindu undivided family, and AOP, association of person, and BOI, body of individual, and artificial juridical person. See, you can see up to uh, 2.5, it is nil. From 2.5 to from 2.5, 50,001 to 5 lakh, it is 5 percentage, and 4 percentage cess. 5 lakh 1 to 10 lakh, it is again 20 percentage, and 4 percentage cess. From 10 lakh to 50 lakh, it is 30 percentage and 4 percentage cess, and all the rest is again 30 percentage, and the surcharges will be changing from 10 to 15, 25 and 35 respectively. Cooperative society, that is uh, up to 10,000, it is 10 percentage, and from 10,001 to 20,000 it is 20 percentage, above 20,000 to 1 lakh, above 20,000 to 1 crore it is again 30 percentage, and above 1 crore it is 30 percentage, surcharge is 12, and the rest of the health and education cess is 4 percentage applicable to all. So this is the end of this chapter. Thank you so much. We'll come up with another module, another topic. We'll meet you soon. Bye bye.